Pablo, good to see you. How you doing? How you been? JP, good to see you as well, brother. How you doing? Evening. How you been? How's things, JP? Joe, evening. Good to see you as well. How you doing? How you been? Comatose, good to see you as well. How you doing? How you been, brother? Lee Robinson, evening. Good to see you as well. How you doing? How you been? How's everyone doing today? Autistic, good to see you as well. How you doing? How you been? Happy Valentine's, by the way, everyone. Okay. Marius, good to see you as well. How you doing? How you been, brother? You know, there's been a lot of things that's essentially been happening around the world today in terms of the SEC. The SEC apparently, breaking news that's coming in, or a source essentially, is coming out to the Wall Street Journal, and it's essentially telling that Coinbase's case could be coming to an ending. Apparently, the SEC has signaled in some sort of a way that Coinbase's case is pretty much going to come to some sort of an ending, which goes back to essentially the Binance pausing of the case, which also could indicate that Binance's pausing has led to Binance's case coming to an end, which would lead to essentially Coinbase's case coming to an end, which will lead to essentially Ripple's case coming to an end as well. As I said previously, the Binance case was the most difficult case for the SEC because it had some sort of aspects of fraud within it. But and the SEC was completely against fraud in every sort of way. But it seems like a source from the Wall Street Journal is coming out and saying that the next case to be completely settled is the Coinbase case, which would indicate Ripple's pretty much next. So it goes also back to essentially what Eric and James were saying. There's 65% chance. Eric and James, Bloomberg ETF specialist analyst. There's a 65% chance of some sort of noise coming out from XRP space essentially this week from the SEC. Which we had some sort of noise, to be fairly honest, regarding the SEC situation, which was the nod of acknowledgement for the XRP ETF filings. Good evening, Miles, and how's it going, brothers? Going great, Cali. Good to see you. How you doing? How you been? Hello, Miles. How are you? T. Good to see you. How you doing? How you been? Greeting. Great. Thank you. I'm having a fantastic weekend. What about yourself? Also, fantastic weekend as well, JP. Hi, Miles. The CMF. Dennis. Good to see you. How you doing? How you been? Even Miles, the CMF family, funky brother, good to see you as well. How you doing? How you been? There's a lot of news on the SEC. Yes, there's a lot of news on the SEC. How long do you think until XRP ETFs get approved, Miles, after the SEC have given the nod? How long do I think the XRP case is going to continue and come to some sort of an ending, settlement or dismissal? Q1, Q2 is where I'm still standing. It could be this essentially quarter, or it could be Q2, but it can't go past Q2. It's just not possible for this case to go past Q2. Hi, Miles of CMF. Stormy, good to see you as well. How you doing, Stormy? How you been? Hello, Miles of CMF. Scott, good to see you as well, brother. How you doing? How you been? I've replied back to all of your direct messages as well, Scott, on Telegram. Even Miles, good to see you, bro. Even Miles and family. Ian, good to see you as well. How you doing? How you been? Abel, my brother, in your opinion, when is a good timeline that we can see double digits on XRP? Thank you. A great timeline that we can see double digits on XRP will be Q3 to Q4, is what I would say. So case drops, because the moment the XRP case drops, we know what's going to happen next, ETF approvals. This year is going to be the year of multiple ETF approvals for altcoins. We're going to get XRP ETFs this year. We're going to get essentially Solana ETFs this year. We're going to get refilings of Ethereum ETFs essentially this year as well, with staking capabilities. We're also going to get some other ETFs coming, like Doge ETF could be a possibility this year. Litecoin could be a possibility this year as well. A lot of ETFs could essentially be coming through this year. I do believe the XRP ETF is going to be pretty much right after the case gets dropped, because there's nothing holding it back at that moment in time anymore. Good day, Miles. Mike, good to see you. How you doing? How you been? Miles, how long does it take for the ETF to get approved and for the ETF to go live? For the ETF to go live, depends. It could take... if the paperwork is done, if all the filings are done and everything's pretty much done and dusted, then it could go live within 24 hours or 48 hours. But it depends if all the filings are done, if everything's done up to particular standards for it to be released in that short period of time once it gets the approval. Good evening, Miles and CMF, Bull XRP. Good to see you. How you doing? How you been? So let me just say this. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. I go by the persona of Crypto Miles, and I essentially host this live that you're watching right now, Monday to Friday, 11:25 p.m. UK time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, basically all the information you need to know about regarding going into this digital future. And we also do Q&As on this live as well, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. And don't feel shy in any sort of way if you are new to the crypto space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to the CMF Live. If you're watching this for the first time ever, and if you're regular, let's go CMF. By the way, I want to say thank you so much to everyone from the CMF who's liking this live right now on X, because I'm getting notifications from X. Thanks so much to everyone on CMF who's essentially liked this live, who's essentially retweeted this live on X, and also put a comment outside the live as well. If you haven't done that, CMF members, please go and do it. Please go and put a comment, like, retweet, and share, essentially, if you can, on X. If you watch this on YouTube, drop a like as well and a comment outside the live as well, CMF members, please, because it does help to essentially expand this live show to reach a larger essential amount of audience members that could potentially benefit a lot from the CMF, and they just don't know we exist. So if you haven't done already, go comment outside the live, retweet, like each other's comments, hashtag the XRP family, and let's go. Let's go inside the comment section. Let's go inside the comment section, and we'll go straight to the first news. I'll give you a breakdown of the news we're going to go through. Good evening, Miles and CMF. Good to see you, Bull XRP. How you doing? How you been? Funky Brother says, does that mean all the banks around the world will not use XRP until the case is completely settled? Yes, in a way. The case needs to be settled before any sort of use case comes into place, because the case needs to be settled. Regulations need to be in place for it to be adopted as a medium of payment transfer. Good evening, Miles and CMF. Happy Valentine's Day to our family. Let's go, Orphan. Yes, happy Valentine's Day to everyone that's watching right now. So, on tonight's episode 263 right now on the CMF Live, on episode 263, we're going to be talking about these topics. We're going to be talking about Abu Dhabi and essentially Wisconsin in terms of a Bitcoin exposure, in terms of Bitcoin ETFs, because we have more ETF, essentially more 13F filings with the SEC. Last week or the day before, I revealed that we're going to get a lot of 13F filings with the SEC. 13F filings essentially is when a company files with the SEC declaring how much Bitcoin or Ethereum ETFs they may currently hold. Something that some companies don't want to reveal, but when it comes to 13 filings, they have no choice. So we have a lot of essentially companies that have exposure to cryptocurrencies through ETFs that kept very silent. But now, because of the 13F filings with the SEC, we know that they hold cryptocurrencies and they have some sort of exposure. We're going to go through that essentially on tonight's live. We're going to talk about Abu Dhabi. We're going to talk about Wisconsin. We're going to talk about Avian Group, essentially also getting involved. We're going to talk about Goldman Sachs. We're going to talk about essentially West Virginia also applying to get some sort of a license, a crypto stockpile. We're going to be talking about essentially Abu Dhabi Sovereign Wealth Fund as well, revealing that they do hold essentially ETFs. They kept very silent about that one. Goldman Sachs, essentially, they kept very silent as well, but we know that for sure now they do hold it. We're also going to be talking about OpenSea on tonight's live, one of the biggest essentially NFT marketplaces in the entire crypto space. OpenSea is about to do something. It's about to bring some major change essentially. And particularly, I never share anything regarding NFT space at all because it doesn't have any sort of relevance for you to make money. NFTs are normally just used for laundering money, to be perfectly honest. But there are some news essentially about OpenSea, which we're going to go through on tonight's live. We're also going to be talking about the SEC Crypto Task Force because they just met with multiple crypto firms. The SEC has had sit-downs with multiple crypto firms regarding what regulations to essentially establish moving forward. We're going to talk about the CBDC, essentially revolutionary payment systems that's happening. India is getting to a stage where they're going to be releasing essentially CBDCs into the Indian market space. They're going to be expanding the portion they've already released into their own essentially financial sector. We're also going to be talking about US banks getting more involved inside the crypto space. We're also going to go through essentially on tonight's live regarding Cardano's founders, a new essentially prediction on the market space of what crypto projects could be next in line to bring some major change, or what could be the crypto projects that are going to lead this market space going forward. We're also going to be talking about XRP ETF filings on tonight's live, what stages they're essentially at. We're going to talk about Ripple's, essentially CEO Brad's new perspective on the market space in terms of XRP, and so on. So a mixture of news essentially to go from tonight's live. And the first news we are going to be covering is Abu Dhabi and Wisconsin. So before we go through that, Abu Dhabi, Wisconsin, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. More than happy to answer any questions you may have. So let's see what's going on inside the comment section. I'll go straight into that next news. Good evening, Miles. And let's go. When is Paul Atkins going to get appointed as the SEC chairman? According to the SEC, according to their previous filings of SEC chairmanships, normally around April time is essentially when somebody gets appointed as an SEC chairman. Morning, Miles of CMF. Shelly, good to see you as well. How you doing? How you been, Shelly? Even Miles of CMF. Pierce, good to see you as well. How you doing? How you been? Happy Friday, Miles. Let's go, Mickey. Happy Friday to you as well. So, Abu Dhabi and Wisconsin, what do they have in common? Well, they both have exposure to Bitcoin ETFs, but not mainly just Bitcoin ETFs, BlackRock's ETFs. Here it is. The state of Wisconsin's investment board, SWIB, has stacked up an additional 3.1 million shares of BlackRock's essentially iShares Bitcoin Trust. How do we know this? Due to their 13F filings with the SEC, pushing its total essentially Bitcoin ETF holdings to around $588 million. According to essentially an SEC filing that they filed up for Q4 2024, that was revealed today. On the other side of the essentially world, Abu Dhabi's investment company has also invested $436.9 million into also BlackRock's IBIT. SEC filings confirm that Wisconsin was the first U.S. sovereign fund to step into a Bitcoin ETF, according to the essentially 13F filings with the SEC today, initially buying nearly 95,000 IBIT shares in March 2024. By August, that number had essentially exploded to 2.9 million. And as of press time, the pension fund holds over 6 million shares of BlackRock's IBIT Bitcoin ETFs. Meanwhile, the Abu Dhabi's essentially Mondolo essentially filing shows its Bitcoin ETFs buy happened around November, but they kept very quiet about it. But now they can't because due to their 13F filings that revealed it today, which was also the month that BlackRock got its UAE essentially crypto licensing. The Mondolo essentially investment fund from Abu Dhabi falls in line with Abu Dhabi's broader digital asset strategy. The UAE has been developing a strong essential regulatory system, starting with the Securities and Commodities Essential Authority Decision number 23 back in 2020, which required crypto firms to secure approvals and licensings. That was followed by administrative decisions number 11 back in 2021, adding more guidance for virtual assets in Abu Dhabi. Then in December 2022, the UAE cabinet introduced the resolution number 111, creating a nationwide framework for crypto businesses and free zones. These are things that are most definitely going to be essentially, qualities that the US is going to be having approaching the crypto space to become the capital of cryptocurrencies. Dubai's Virtual Asset Regulatory Authority was also established to oversee crypto regulations in Dubai. The VARA sets licensing requirements for virtual asset service providers and enforces compliance standards. Crypto companies also looking to operate in Dubai must meet strict regulatory requirements, including obtaining a full license and complying with very tough, essentially anti-money laundering, essentially AML laws, and combating essentially financing and illicit activities, CFT laws. Now, under Dubai's virtual asset service provider, firms must have essentially some sort of secure initial approval and then apply for a full operational license, which must be renewed annually. These are things that are most definitely going to be offered inside the United States when it comes to any business getting involved inside the crypto sector. Wisconsin and Abu Dhabi aren't the only institutional players making moves in Bitcoin ETFs. For example, Barclays Bank, massive bank, Barclays Bank is also holding essentially Bitcoin ETFs through BlackRock's IBIT, which was released today due to their 13F filings. Now, what's interesting about essentially Barclays Bank is that Barclays doesn't like the idea that any of their customers buy cryptocurrencies. Barclays will restrict you from buying any sort of cryptocurrencies on any sort of market space. It could be Binance Exchange, Coinbase Exchange, Crypto.com Exchange. Barclays Bank is extremely strict on their customers buying crypto assets, even if it may be only $20 worth of XRP, Barclays Bank will reject you from buying it. However, in Barclays' case, they're holding 131 million essentially dollars of investments in Bitcoin's BlackRock essentially IBIT ETFs. So it's perfectly fine for the massive banking corporation of Barclays to hold $131 million, essentially having $131 million of exposure to Bitcoin ETFs, but for their customers as a Barclays Bank customer to even essentially purchase $20 worth of cryptocurrencies, it's perfectly wrong, apparently. Now, the Q4 SEC filings also show that the investment giants like Goldman Sachs, which we're going to go from tonight's live, and JP Morgan have also ramped up their Bitcoin ETF exposures. And another essentially company that has had some major exposure to cryptocurrencies was Aneo Group. Aneo Group expands Bitcoin ETF stakes as institutional interest grows even further. Aneo Group has experienced its Bitcoin holdings reporting $599 million in their BlackRock's essentially iShares IBIT trust. Once again, how do we know this? 13F filings. All the companies or all the banks that said to their customers or to their clients, crypto is bad, don't go towards crypto, don't go near crypto, they're all holding BlackRock's IBIT, essentially Bitcoin ETFs. And we only know this because the SEC reviewed their 13F filings today. So we know which company is holding and which company was completely lying to the public about cryptocurrencies. A near essentially increased exposure was revealed in its 13F filings, which details institutional investments, including asset positions and valuations as well. The surge aligns with IBIT's rapid growth, which now manages $56 billion in assets. The growth of BlackRock's Bitcoin essentially ETF reflects rising institutional interest in crypto investments. Anear's expanded stake highlights a strict bet on the growing demand essentially for regulated digital asset investment products. And the firm also disclosed $4.2 million stake in Fidelity's Wise Origin Bitcoin fund, holding 52,000 plus shares. Anear Group is an institutional essentially family house and an investment management firm dedicated to investing in emerging technologies through financial technology innovation. They also have offices in Hong Kong, the United States, the United Kingdom, Japan, and Singapore. The firm also manages a wide range of multi-asset class, multi-strategy investments across both institutional financial market spaces and the digital asset sector as well. Barclays, also the UK-based institution, also acquired 2.4 million plus shares of IBIT shares, entering the Bitcoin ETF market space, and the purchase was occurred in the fourth quarter of 2024 from October to December during a post-election Bitcoin price driven by US President Donald Trump pro-Bitcoin stance or pro-crypto stance. So when Donald Trump was essentially coming in as the president of the United States, when he was essentially, it came out, Donald Trump is the president of the United States, Barclays Bank purchased essentially roughly 2.4 million shares of IBIT's BlackRock's Bitcoin ETF trust, which essentially comes to a price point of, for essentially Barclays, $131 million, which is crazy if you really think about it, because Barclays doesn't like their customers holding crypto assets. How do I know this? Because I own a Barclays bank account. I tried to purchase essentially cryptocurrencies. So I'm not saying this from somebody else's essentially perspective or from somebody else's opinion. I'm a Barclays essentially bank holder, and I tried purchasing cryptocurrencies from Binance. Barclays Bank did not let me. I tried purchasing essentially from crypto.com. They did not allow me. I tried purchasing from Coinbase. They did not allow me. I tried purchasing from Trust Wallet. They did not allow me. I tried purchasing from Uphold, and they did not allow me. They completely rejected me buying cryptocurrencies, even if it was $20 or $100. But it's perfectly fine for Barclays to have $131 million of exposure to Bitcoin. But if I want to buy as a Barclays essentially account holder any sort of cryptocurrencies, I'm not allowed. It's just, full-on hypocrisy is what it is. But, once again, banks telling you, crypto this, crypto that, and look what they're doing essentially. Now, also on the topic of exposure to Bitcoin ETFs, or essentially getting involved inside the cryptocurrency sector, or a crypto stockpile is what essentially the new phrase is, where we're going to have a basket of cryptocurrencies rather than just one, which always made a lot more sense. Having multiple cryptocurrencies for each country as a portfolio makes 10 times more sense than it ever did just to have a Bitcoin essentially stockpile. So West Virginia essentially is the newest legislator to introduce digital asset reserve bills. West Virginia State Senator Chris Rose essentially has submitted a bill today titled the Inflation Protection Act of 2025 to allow the state's treasury to invest a portion of its holdings into digital assets or precious metals. The bill submitted essentially today creates a provision on essentially for the West Virginia Treasury to invest in any digital asset with a market capitalization of over $750 billion, including stablecoins. At the time of writing, Bitcoin is only the digital asset that meets the market cap requirements outlined in the proposal from the bill from West Virginia. According to the bill, the Treasury can only invest 10% of its total funds into digital assets and precious metals. Additionally, the state can also hold these assets on-chain or through essentially ETFs. The Senator Rose bill is the latest in the torrent of legislative proposals in a state level established for a Bitcoin or a crypto digital stockpile as a reserve or essentially a hedge against currency inflations due to structural deficiencies and spendings. US President Donald Trump commissioned a working group to study the feasibilities of a digital essentially asset reserve for the United States Federal as the EO essentially signed the executive order, a bill that would allow the essentially Utah State Treasury to invest a portion of its assets into Bitcoin or any essentially any sort of high profile digital assets or high value altcoins and stable coins. And essentially the Utah House of Representatives are trying to pass this bill. Now, the bill has advanced the Utah Senate, where it must also pass a vote before heading to governor for final approval. Now, out of the 21 to 22 American states that have applied for some sort of a crypto stockpile or a Bitcoin essentially stockpile, Utah is pretty much the only one that has advanced the furthest. And Utah isn't a Bitcoin stockpile, it's a crypto stockpile. They're trying to go for a basket of cryptocurrencies, which always makes a lot more sense, as I said previously. Now, Kentucky also joined the growing list of U.S. states where digital asset reserve bills have been introduced. The Kentucky bill also allows up to 10% of state funds to be allocated to digital assets, including essentially Bitcoin. Michigan also became the latest state with a strict digital asset reserve proposal after Representatives Brian and Ron Robinson introduced a legislation as well. Unlike the other bills, the Michigan proposal did not include specific restrictions on types of digital assets to be included in the reserve. So Michigan went completely for a different approach. They said we're pretty much going to go for any sort of assets on the digital market space or even precious metals. But we're not going to name which ones we're going to go for because some of the US states have mentioned specifically they're going to go only for Bitcoin. Some US states have mentioned they're going to go for a basket of cryptocurrencies. And in Michigan's case, they haven't said anything. They just said, we want also to go digital as well, but we don't know what we're going to go for yet. But we're still going to create some sort of a bill to move forward with. Now, before I go through essentially the next news, which is regarding Abu Dhabi again, but let's go to the comment section first, and then we go straight into Abu Dhabi news. As I said previously, this is live, which means if you do have any questions, don't be shy. Put it down in the comment section. I'm more than happy to answer the questions you may have. Also, previously, I did something with the comment section where I said, you know, if you are somebody that's inside the crypto space and you're new inside the crypto space, or if you're already currently inside the crypto space for years, but you always have this question on the back of your mind, ask away. I've always said this, people, you know, if you do have a question, so if you're somebody inside the crypto space and you're unsure about one particular thing about the crypto space, or you're unsure about something that's just bothering you inside the crypto space, and you have a question, ask inside the comment section, go for it. Don't be shy, because I am always here to help people essentially whenever I can, Monday to Friday, and obviously on direct messages as well. I don't charge any money. I'm completely free of source. So if you're somebody right now inside the crypto space, even if you're a CMF member as well, and you have some sort of question in the back of your mind that you really want to ask, go for it. What is this question that's bothering you inside the crypto space? It could be related to price points. It could be related to essentially SEC filings. It could be to whatever. Go for it. Don't be shy. Now, let's go inside the comment section first before we go to the Abu Dhabi essentially section. Miles, no, we were here actually. We are heading for a cashless society. Cryptos or digital cash will not help you in the end. BlackRocks or criminals. It's Carlos. I agree. We are definitely heading towards a cashless society. With the announcements of many banks that we've had, for example, Santander Bank has decided to close down all of their branches very soon inside the United Kingdom. Lloyd's is closing down 170 branches inside the United Kingdom as well to go towards a cashless, essentially, bank. All banks are going digital. It's not really that something optional in any sort of a way at all. So it's something that you would have to accept and adapt as soon as possible. So you can be the person that goes against this whole cashless society and try to stand for good. But at the end, you're going to be the only one standing by yourself. So I always see it as it's better to essentially adapt than rather to get left behind. Because if you get left behind, you'll always be at the back of the line. But if you adapt fast enough, you could be at the front of the line, which means if you realize which particular assets are going to be used for this digital world, then you might want to be aiming for those particular digital assets. If you know, for example, XRP is going to be used as a medium of payment, you might want to start looking into XRP. Or if you know XLM is going to be used as a medium of payment, you might want to start looking at XLM. Or essentially HBAR is going for essentially for tokenizations, or essentially medium of payments. You might be looking into that, for example. Or Neo protocol for going for essentially digital data essentially storage. You might want to look into that. Or Graph for data or essentially AI. You might want to look into that, and so on and so on. And you can tell which crypto projects are going to have the most amount of use cases going into a world of utility compared to the rest. And the easiest way to tell is contracts. When it comes to any crypto project, every crypto project can come out and say, we're going to do tokenizations, we're going to do finance, we're going to, we move money faster than everybody else. We move, our crypto moves 3 seconds faster than, for example, XRP or something on those lines. And it's a complete load of BS. Every crypto project can sell hopes and dreams essentially on their dream boards to anyone that's willing to buy their tokens. But the easiest way to tell from the lot of fake essentially crypto projects to actual ones that have actual purpose under regulations that would be the best compared to the rest is very easy. They're contracts. So if there's a crypto project out there that has a contract with IBM, you know it's going places. If you see a crypto project that has a contract with essentially centralized banks, you know that crypto project is about to go places once regulations start kicking in. If you see a crypto project that's partnered essentially with BlackRock, if you see a crypto project that's partnered with Goldman Sachs or JP Morgan or Citibank or essentially SBI, and the list just goes on. If you see any crypto projects with major established, major partnerships backing them, behind them, for it could be tokenization purposes, data purposes, Web3 purposes, AI purposes, or even financial purposes, in terms of a medium of a payment exchange, then you know that crypto project is pretty much chosen to do the best under regulations. So the easiest way I can tell you essentially is, yes, we are heading towards a cashless society, and cash is going to go away, and we're going to go very digital very soon. And worrying about it is the last thing you want to do. Adapting to it is the first thing you want to do. Just adopt to it straight away. Just adapt to what's about to be happening. There's an old saying: if you can't beat them, join them. The world's going digital. Nobody can stop it. So going with that old saying: if you can't beat them, join them. It's very simple. And you can't go against a digital world. It's going to happen whether you like it or not. So adapt or get left behind. Not saying in a harsh way in any sort of a way, Carlos, but that's just how it is. Hi, Miles, the CMF. George, good to see you. How you doing? How you been? Miles, honestly, when is the bull run likely to start? When we start to see parabolic essentially growth in altcoins? The moment we'll see parabolic essentially growth in altcoins is once these cases are dropped. Once essentially the Coinbase case is dropped, it shows confidence to the market space. It shows confidence to Wall Street. It shows confidence to banks, institutions. When Ripple's case is dropped as well, essentially when the Binance case goes away, and there's no essentially major crypto cases stifling the space anymore. Now, while these cases are about to either be dismissed or settled, and by the way, there's a source or a rumor happening from the Wall Street Journal that's claiming the Coinbase case is pretty much next to essentially drop. The Coinbase case is about to be next to essentially get settled or dropped completely. And putting that to essentially to one side, but how we're going to see this parabolic growth is these cases need to go away. We have to have no major cases inside the crypto space, first of all. Also, we have to have regulations in place. Now, the good thing is the cases are about to go away and the regulations are coming through with all the pro-crypto activity that's happening inside the crypto space with essentially, as I said, the CFTC, the SEC, the CFPB, the OCC, and the FDIC. They're all pro-crypto essentially prominent now compared to what they were, which were anti-crypto. All the chairmen, all the acting chairmen are all pro-crypto. For example, CFTC had a crypto task force that was only built for enforcement actions to go against the crypto space no matter what. But now the CFTC's acting chairman, essentially Caroline Pham, decided to split that essentially crypto enforcement action from the CFTC, make it into two pro-crypto essentially groups. One pro-crypto group essentially for bringing regulations, and one pro-crypto group just to go against essentially fraud inside the crypto space, but not actually bring enforcement against everyone inside the crypto space. Same goes with the SEC with their crypto task force to become positive. So what I'm trying to say is they're all laying in the foundation, right? We're pretty much at the stage of foundation and cases getting dropped and ETFs being approved. Everything is about to come together like a domino effect, back to back together. Cases getting dropped, ETFs getting approved, regulations kicking in, adoptions kicking in. So we're pretty much at the foundation stage. Foundation is getting late. At the same time, the foundation is being laid for the crypto space in terms of an executive order being signed, all the acting chairmen being changed from all these major high-profile government departments that have been stifling the crypto space for the longest time. They've all went away. So right now, the stage we're at inside the crypto space is the foundation is being laid. At the same time, the case is about to get dropped and settled. At the same time, we're going to have essentially, not at the same time, but straight afterwards, we're going to have essentially the regulations coming, the ETFs coming pretty much at the same time. So that is what's happening right now. So we're not that far off from that parabolic run that you want inside the crypto space. I'm getting so. Hi, Miles. I hope you're well. Adi, good to see you as well. How you doing? How you been? So, Funky Brother, we're not that far off in any sort of way. Adi, good to see you as well. How you doing? How you been? Miles, I can buy with Barclays from Kraken and Opal. I can buy with Barclays account from Kraken and Opal. I can't. For some reason, Barclays will not let me buy. Lloyd's lets you buy. Sterling Bank won't let you buy either. But Barclays does not. It didn't let me buy it. It didn't let essentially anybody else buy it. Any of my friends buy it. First of all, I tried it. Barclays rejected me from every exchange. And then I, essentially having that conversation with them, they just don't like to go for cryptocurrencies. They won't let me go for cryptocurrencies. Lloyd's let me purchase cryptocurrencies a few times, and then they blocked it essentially. And then I had to make a call and tell them, I'm an owner of essentially a blockchain startup company and so on. And I understand cryptocurrencies and I understand the risk and so on. And then Lloyd's opened my account and said, do whatever you want, buy unlimited cryptocurrencies. Barclays, on the other hand, stifled me completely. Happy Pisces, good to see you. So how you doing? How you been? Hi, Miles and CMF. Peg, good to see you. So how you doing? How you been? So you're lucky that Barclays is letting you because they won't let me. Would you diversify your portfolio by adding XRP ETFs? No. So would I diversify my portfolio by buying XRP ETFs? No, because I'd rather buy the asset itself. So the number one case reason for anybody to buy an ETF. So there was a study test that was done. And the study test was why somebody would buy essentially a Bitcoin ETF or an ETF. But in this case, the question is, why would somebody buy an XRP ETF or why would somebody buy XRP ETF or the XRP itself? And the study report came back to the number one reason why somebody would buy an ETF rather than the crypto asset itself is because they're lazy. No word of a lie. It's because you're buying essentially the same asset, but the people that are buying ETFs just want to be a part of the blockchain space, but they don't really want to be the ones holding it and sending payments and receiving it and doing a custody service about it and worrying about it. So they just want to be a part of the crypto space. So if you're somebody that's buying an ETF of a crypto asset rather than the crypto asset itself, you just want to be a part of the crypto space. It was essentially the number one answer from the study test that was done of why would someone buy a Bitcoin ETF rather than an ETF, essentially, rather than a Bitcoin itself. It's because they're lazy. The number one question, the number one answer. They would rather just be a part of the blockchain space than understand what it really is. And there's no point of buying an XRP ETF if you already own XRP. If you want to buy more XRP, just buy XRP itself, not financial advice in any sort of way. But buying XRP ETF makes zero sense for somebody that's inside the crypto space and understands essentially what XRP is, understands what blockchain is, understands how to do payments, how to secure their own wallets on a cold storage wallet and so on. But if you're somebody that has difficulty understanding the crypto space, if you're somebody essentially that worries about their assets getting compromised, worries about their assets getting hacked, or you get scammed or something like that, then an XRP ETF makes sense for somebody like that. But if you're somebody that understands not to click on random links, not to connect their wallet to random essentially websites in the DeFi space and so on, then you don't need to be buying XRP ETFs. However, if you're somebody that doesn't essentially is worried about getting compromised or hacked or clicking on a random link, then an ETF of a crypto asset makes sense, because then it's up to that particular essentially platform or that particular essentially institution to secure your assets. So if you essentially buy from BlackRock, BlackRock is the one securing your XRP ETFs rather than you essentially keeping your XRP ETF on a tangent, for example, or keeping your XRP on a tangent. So it's completely up to you. If you want to go, if you want somebody else to secure your assets, then go for it. But if you're somebody that, can secure your assets, then you don't really need to go for an XRP ETF. Yes, Max, I would. Absolute knowledge. Let's go. How you doing? Share the live. Let's go, Scott. Hello to my CMF on YouTube. How you doing, Scott? Good to see you, brother. Get a Monzo account and they allow you to buy crypto. It's really good. I've struggled many, many times, but never had an issue with Monzo. Let's go, Addy. Thank you for that, brother. Lloyd's is the number one platform for me. Lloyd's Bank, number one. No issues buying crypto. They let you buy a limited amount of crypto once you have a conversation with them on the phone. Beforehand, they might block you, but once you have a conversation with Lloyd's on the phone, they will let you, Lloyd's Bank, they'll let you buy unlimited amount of cryptocurrencies. Miles, I'm completely gutted. It's impossible to buy XDC in Ontario, Canada, unless I get a VPN through Maxi, but that makes me nervous, or I can collab and Brown in Australia to custody it for me. They carry useless meme coins. No, Happy Pisces, don't do that. Don't buy through Ontario. Okay, what I'll do instead, Happy Pisces, is direct message me after the live, and I'll find a solution for you to buy XDC the legitimate way. I'll find your way as a Canadian citizen. Direct message me after the live. I'll take a link to it for you, and we'll find a way for you to do it. I buy ETFs because my money is an IRA and I can't take it out to buy crypto/taxes. Fair enough, G. That's essentially a good way to do it. It makes sense if you want to do that way, due to that essentially the IRA situation. Why not? Hey there, Mouse. It's nothing wrong. There's nothing wrong with buying an ETF. If you want to buy an ETF, there's nothing wrong with it. Your assets will be secure in a different way, where you don't have to worry about your Tangent or your Ledger wallets, and the massive organization or massive institution has to worry about holding your assets safe. But also, when you buy an ETF, you don't really own the asset itself either. XDC, what about Uphold? Yeah. So, Abu Dhabi's sovereign wealth fund has just revealed that they're also holding $436 million in investments in their Bitcoin ETFs. Again, how do we know this? 13F filings with the SEC. The 13F filings, essentially during this week, are going to, or even next week, the 13F filings with the SEC are going to reveal a lot of things about which institution or which bank holds certain crypto assets, which they've been very quiet on, because they can't stay quiet when they're filing out their 13F essentially filings. So, Abu Dhabi essentially sovereign wealth fund reveals $436 million investments in Bitcoin ETFs. It was actually disclosed that Abu Dhabi sovereign wealth fund, essentially Mother Investments Company, has made a substantial investment, approximately $436.9 million into essentially Bitcoin space. And the acquisition of over $8.2 million in shares in IBIT essentially represents over 0.14% of their total assets under essentially management, which amount to approximately $302 billion. This investment reflects a broader trend among sovereign wealth funds in the Middle East as they explore diversification strategies and include cryptocurrencies. Following the announcement from essentially Abu Dhabi's major essentially wealth fund investments, Bitcoin's price reacted positively to this announcement. Abu Dhabi's involved now. And shortly after the news broke, the trading volume also increased significantly, indicating a heightened market activity towards and interest towards Bitcoin due to Abu Dhabi's announcement. The latest development is a part of Abu Dhabi's ongoing efforts to establish itself as a key player inside the cryptocurrency landscape. And the Emirates has previously invested in Bitcoin mining initiatives and is actively working to integrate digital assets into the financial ecosystem. As institutional adoption of essential cryptocurrencies continues to grow, this move positions Abu Dhabi's alongside other global investors looking to capitalize on essentially evolving digital assets and essentially markets. So once again, another 13F filing has just revealed that essentially a major Abu Dhabi wealth sovereign fund, is invested into BlackRock's Bitcoin IBIT ETFs. And they're not the only ones. Goldman Sachs has been incredibly quiet when it comes to crypto space. Goldman Sachs, in fact, criticized the crypto space for the longest time. And well, here it is. Goldman Sachs, after years of bashing the cryptocurrency space, US investment bank Goldman Sachs has admitted it was wrong about the asset class, the digital world. Not in words, but in action. The investment giant, which manages nearly $3 trillion in client assets, is buying up hedge quantities of Bitcoin and ETH, essentially ETFs, exchange-traded funds, in a matter of months. The investment bank increased its ETF exposure by 2,000%, and it also upped its Bitcoin ETF holdings by 114%. And Goldman Sachs was bashing cryptocurrencies for the longest time. This week's essentially, Goldman Sachs crypto capitalization, the rush of the Japanese companies also buying Bitcoin, and the surge of stablecoin adoptions this year. Although crypto prices are down so far in February, institutional adoption is clearly on the rise, believe it or not. And according essentially to regulatory filings with the US Securities Exchange Commission, SEC, Goldman Sachs purchased nearly $1.28 billion $1.28 billion worth of iShares Bitcoin Trust IBIT in the fourth quarter of 2024. This is the exact same Goldman Sachs that said that they are against cryptocurrencies. There is no point of cryptocurrencies. And it's the same Goldman Sachs that spent $1.28 billion on Bitcoin and Ethereum ETFs. Along with essentially $288 million worth of Fidelity's Wise Origin also in the Bitcoin fund. And when did they purchase it? When Donald Trump essentially became president. When it was announced Donald Trump was president of the United States, Goldman Sachs instantly brought Bitcoin, $1.2 billion of Bitcoin and essentially Ethereum ETFs. And on the side, $288 million worth of essentially Fidelity Wise Origin Bitcoin funds as well. And the filings also show that Goldman Sachs holds roughly $3.6 million worth of Grayscale's Bitcoin Trust also. And during the same quarter, Goldman Sachs increased its exposure to Ether ETFs from $22 million to $476 million through BlackRock's iShares Ethereum Trust and Fidelity's Ethereum Fund. The investment bank first foray into essentially crypto ETFs was in the second quarter of 2024 when it purchased $418 billion worth of Bitcoin funds. And the company's buying spree in essentially quarter four was likely triggered by the election of essentially pro-crypto president Donald Trump, who has promised to transform America into the world's blockchain capital, which is definitely going to be happening. The United States is definitely going to become the capital of cryptocurrencies, no doubt about it. And everything is going to be following their footsteps. Every country is going to be following their footsteps, no doubt about it either. And the next news, essentially, we're going to be talking about is OpenSea. But before we go through OpenSea news, and if you're wondering what is OpenSea, OpenSea is pretty much the #1 NFT marketplace, or it was one of the, you could even say, NFT marketplaces in the entire crypto space. OpenSea was the one that started the whole NFT rage long time ago, when everybody was buying pictures of rocks and dogs and cows. In reality, it was just money laundering, but a lot of people didn't know it was money laundering. But OpenSea, we have some announcements about that. Before we go through that, let's go start the conversation first. Let's go start the comment section first. Let me go straight into the OpenSea news. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. More than happy to answer any questions you have. What is an ETF? ETF is basically an asset that you would buy but never will own, and is backed by essentially, it could be backed by precious metals and gold and so on, or the asset itself. Hey everyone, Custom, good to see you. How you doing? How you been? I'm in Canada, and the best way for me to get my hands on XDC was swapping tokens through my Tangent wallet. You could do that as well. That's not a bad idea, essentially. Happy Pisces, you can do that through Tangent wallet if you want to. It's never recommended to essentially connect your wallet to the DeFi space to make swaps happen, but if it's the only option left, why not? An ETF is basically like a stock as well. Now, OpenSea. I'm in Ontario, Canada, and brought all my XDC on BitGet. Thank you for that, Mickey. Happy Pisces. If you're struggling still to buy XDC, there's two options now for you on the table. One is to buy through Tangent Wallet if you're in Canada and you want to buy XDC. The second option is coming from Mickey, which is you can buy from essentially BitGet Exchange. Essentially, you can buy XDC on BitGet Exchange for Canadian citizens. Thank you, Mickey, and thank you, Comatose, as well, for helping out Happy Pisces in Canada. Now, OpenSea used to be the #1 marketplace for NFTs when NFTs were booming, and not so much now. Obviously, NFTs are not booming that much. I mean, the NFT space does still exist, but I don't know anyone that's buying pictures of rocks and cows and dogs and cats when you can buy XRP or XLM or XDC or HBAR. You get the picture. But OpenSea has just announced today that they're launching their own token. So pretty much the #1 NFT marketplace in the world is about to be releasing their own token. It's going to be called Sea Token. And they're going to do essentially airdrops inside the United States as well. So if you're somebody that's still inside the NFT space or wants to be involved in the NFT space because you think it might come back, here it is. After much anticipation, OpenSea, one of the largest NFT marketplaces in the world, has officially unveiled its plans for the launch of its native token, Sea, Sea as in SEA, alongside a grand airdrop. On February, essentially today, the company shared key details about the token launch, which will coincide with the platform's major OS2 upgrade. While the timing of the launch remains uncertain, the excitement around C token essentially and its airdrop has already begun to grow within the crypto communities. OpenSea clarified that the airdrop will be available to users who have a history of activity on the platform. This includes not only recent interactions, but also users who have engaged with OpenSea in the past. Furthermore, users at the Seaport essentially protocol will also be eligible for the airdrop as well. OpenSea has confirmed that no KYC essentially process is required for participation, making it accessible to crypto users even inside the United States as well. The airdrop also will be detailed and further once the token is ready for distribution. And OpenSea are essentially abstained from releasing a token for multiple years, while its competitors such as Magic Eden and others established their token infrastructure. OpenSea initiatives essentially release of a C token during its intensified efforts to maintain a market leader position in the NFT marketplace as essentially the competition starts to slowly rise. Through the implementation of the C token, OpenSea plans to build a better feature, including lower market fees, with the ability to manage cross-chain NFT protocols, and some market participants and enthusiasts remain uncertain about the precise cost of C token, yet are actively showing their interest in it. The token currently generates predictions for major price essentially shifts following its launch on Uniswap, as well as other essentially decentralized platforms. And the price shifts are likely to occur because of intense trading activity occurring during early market sessions and the potential for market manipulation together with questions about token distributions. So if you are somebody that's still very big inside the NFT market space and you want to go back into NFTs, one of the you can even say biggest NFT marketplace in the world is about to be releasing their own token called C token, which is essentially SEA. Not C as in SEE, but SEA. Now, SEC is what we're going to talk about next. Also, I just realized, Scott, thank you so much for helping out Ben Smith inside the comment section as well by putting what the description of the ETF is to answer Ben's question inside the comment section as well. Thank you for that, Scott. Now, thank you, brother. SEC. The SEC Crypto Task Force essentially met with firms to discuss staking, litigation, and other review processes. The SEC is having sit-downs with blockchain companies to discuss many things. Now, they've chosen a few blockchain companies for now, but every day or every week, they're looking into more blockchain companies to invite over to the SEC to have a sit-down with the SEC, something that we've never seen before. Gary Gensler never invited any crypto companies to have a sit-down or a coffee or a tea break to discuss matters of cryptocurrencies, unless they sue them or send them a Wells notice. But the SEC new crypto task force, run by Hester Pierce, essentially, is showing a very different approach to cryptocurrencies, or to cryptocurrency companies in this sense. So here it is. SEC Crypto Task Force met with firms. The U.S. Securities and Exchange Commission Task Force met with essentially several representatives from the cryptocurrency and traditional essentially finance sectors to discuss issues impacting digital assets in early February. Key themes included staking when it comes to cryptocurrencies. What should we do about staking? What should we do regarding clear guidance for ETPs? And essentially new asset frameworks for policing the emerging asset class in general. According to what's available on the SEC website, the Crypto Task Force met with the Blockchain Association inside the United States and industry lobby groups as well. And the lobby group suggested 6 priority essentially areas the task force should focus on to tackle issues that impact the digital asset industry. So this is a perspective coming in from the Blockchain Association, who has had a sit down with the SEC to discuss what should be the next steps taken for a pro-United States when it comes to cryptocurrencies, or the capital of cryptocurrencies. In addition to establishing regulatory principles and clearer guidelines, the SEC was requested to adopt a pro-innovation approach to broker deals, custodians, and exchanges, and establish uniform ETP standards, and to ensure protocol stakings is not classified as a security, because that was quite ridiculous. Everything Gary Gensler did was quite ridiculous, to be fairly honest. The Blockchain Association also called the SEC to review and correct enormous, essentially, interpretations of law made by previous administrations. The review process was outlined by the SEC Commissioner Hester Pierce as well. Representatives from Jito Labs and essentially Multicoin Capital met with the crypto task force with the SEC to discuss the possibilities of adding staking to ETPs, something that Ethereum ETFs need, which is staking, which could be a possibility of happening, and it should happen, to be fairly honest. According to the SEC document, the representatives described staking as a true nature of proof-of-stake tokens, but not a security. And when the SEC essentially approved spot, essentially Ether exchange-traded funds last year, it asked issuers to remove the ability for funds to earn staking rewards. According essentially to Jito and Multicoin Capital, we understand the SEC staff may now be essentially to revisiting essentially staking in ETH and other crypto ETPs, including in connection with new applications filed for Solana essentially ETPs. And the crypto task force met with Anderson Howard's Capital Management Group, also AH Capital Management. The discussion centered around token classifications and issuance and market intermediaries. A separate SEC document showed that the crypto task force met with representatives from the NASDAQ. And essentially, in addition to bringing regulatory clarity to digital assets, and the SEC's task force was requested to clarify the venues that are permitted to trade cryptocurrencies. The SEC has had a sit down with quite some big names out there. I mean, the Blockchain Association for one, the second being the NASDAQ, the third and fourth being these essentially major essentially asset management firms, and finally bankruptcy law firm and former FTX counsel Savilian and Cornwall sent Colin D. Lloyd to meet with the SEC crypto task force to discuss blockchain technology and topics related to securities laws. The election of Donald Trump has raised expectations of major policy shift inside the United States digital asset sector. And the SEC task force, which is being led by the SEC's pro-crypto Pierce, was essentially established on President Trump's second day in office. Pierce has vowed to clean up the mess left behind by essentially former SEC Chairman Gary Gensler, who brought more than 125 enforcement actions against the industry during his tenure. And the U.S. House essentially subcommittee on digital assets of financial technology and artificial intelligence heard from 5 witnesses on the future of crypto regulations in the country. Kraken's deputy, also general counsel, Jonathan, called for establishing fundamental rules for centralized intermediaries, while the crypto council, essentially for innovation, President Drew Han Kim, also said policymakers must unwind the significant damage and uncertainty caused by the regulation by enforcement approach by the prior administration inside the United States. Meanwhile, former Commodities Future Trading Commission Chairman Timothy essentially also called for major revisions to the Stablecoin Act, a draft bill that was recently essentially put forward for Representatives Frenchhill and Brian Steele. So it turns out the SEC has been having sit-downs with some major establishments. The SEC has sit down with essentially asset managers, with crypto firms, with essentially congressmen, with senators, and all of these have been happening behind closed doors. And why are they doing this? To bring in the laws, to bring in the foundation that we need inside the crypto space. To be fairly honest, we didn't have a foundation inside the crypto space to stand on when it came to laws or regulations or policies. All we did have is enforcement actions and Wells notices and so from Gary Gensler previously, but not anymore. So we could be essentially seeing more sit-downs happening with the SEC. We could possibly see Ripple having a sit-down with the SEC. I'm guessing everybody wants to see that one happen, where Ripple is having a sit-down with the SEC to discuss policies and regulations of what's beneficial for the United States. That would be amazing to see. And I do believe Ripple is going to be next pretty much to have some sort of a sit-down with the SEC. Coinbase is also going to have a sit-down with the SEC. Brian Armstrong, in other words, the CEO of Coinbase, and a few other major CEOs are definitely going to have a sit-down with the SEC, to be fairly honest. So we could probably see those headlines popping up anytime soon as well. And also based on that rumor, that I essentially earlier on revealed, a source telling the Wall Street Journal that Coinbase's case could be coming to an end very soon, because Binance's case goes on a 60-day pause, is interesting, because Binance was the only crypto case with the SEC that had some sort of essentially elements of fraud inside of it, which is what the SEC goes against when it comes to crypto space. And I said, if the Binance case is about to go away, that means Coinbase and Ripple's cases are next. And it seems like Coinbase's case is next to get dismissed or settled, according to one particular source from the Wall Street Journal. If Binance's case is paused, Coinbase and Ripple pretty much next. And Coinbase's case about to get dismissed, Ripple could be next as well. And I do feel like some sudden boom is going to come to the market space. I feel like a sudden boom is about to be coming to the market space if things start falling in place like a domino. We could be expecting a sudden boom and then tiptoeing up. So a sudden boom of, and then just a little bit down and then tiptoeing up, tiptoeing up, tiptoeing up. I feel like we're getting very close to that sudden boom. Now, CBDCs. Central bank digital currencies. I've been talking about CBDCs for 2 years and a half. About 2 years and a half or 2 years I've been talking about CBDCs on this live. And well, it's something that you all have to be preparing for no matter what, because nobody can stop it. And it's going to be happening. Even though Donald Trump has signed an executive order for CBDCs not to happen inside the United States, it's actually that the CBDCs can't be produced by the Fed is what it is. And it's also, it doesn't say which type of CBDC can't be produced. And in most cases, the executive order Donald Trump signed, it's a CBDC for the retail section that can't be produced. But a CBDC for the wholesale section can still be produced inside the United States for banks and institutions to be using domestically or internationally with other CBDC banks and institutions around the world. Because wholesale CBDCs are going to happen as well, just like retail CBDCs are eventually for a lot of jurisdictions. But this year being a lot of CBDC released from around the world. But in general, India used to have, essentially, India is quite big on CBDCs, and they're releasing, they're expanding on their CBDCs this year a lot more. And in terms of countries coming out with CBDCs this year, Brazil is one of them. They're releasing Drex CBDC this year, Brazilian CBDC. Russia is releasing the Russian Rub CBDC this year. There's a few other countries releasing this. The EU is releasing some sort of a CBDC in a small portion this year as well, but in Q4 they said essentially. So in terms of CBDCs, we're getting a lot of releases, and most of them are wholesale and essentially wholesale CBDCs, but some of them are wholesale and retail together. Wholesale pushed more, retail pushed a little bit. But in general, India used to have a CBDC type model, which was you scan using your smartphone and you pay for the item. Now, India, essentially their banking system is with XRP, it's with the XRP ledger. How do we know this? Because India did essentially a bank committee where they talked about, what platforms they've been using within their banking systems. And it said behind the guy on his PowerPoint doing a bank governor essentially meeting, he said it that they work with Ripple, essentially have been using the XRP ledger. And behind him, there's a picture of a logo of Ripple as well, where he's describing they've been using the XRP ledger for test purposes in terms of, the banking world. So India is quite big, essentially, on XRP, but also it should be because, Ripple is mentioned in the Bank of International Settlements under the PDF documentation titled Cross-Border Payments. SWIFT is on that document as well, but so is Ripple. That's a public information. It's free information. You can check it out from the Bank of International Settlements. 63 centralized banks are pretty much under it. So it should be essentially because India's bank is is one of the banks under the Bank of International Settlements, their central bank. And Ripple being on that document for cross-border payments. But India had a test system as a digital world system, which was people would use their smartphones to scan a barcode and then pay for the item. This could be groceries, this could be paying for fuel, this could be pretty much for anything, restaurants, bars, or whatever, the places that had a UPI system. Now, when India released a UPI system, everybody said, well, we don't need CBDCs because India has UPI system now, which, it has no relevance to have a CBDC anymore because people could just scan and just pay for the item using QR code, the UPI system. It turns out India was only doing a UPI system to get ready for a CBDC system. And a lot of people thought inside the crypto space that, or inside the CBDC space, a lot of people thought that India is, going to be shifting towards UPI systems instead of CBDCs. But it just turns out they were using UPI systems to get people ready to paying essentially on scanning things with CBDCs. It was all a setup. And how do we know this? Because of this. CBDCs will completely revolutionize entire payment spaces, just like UPI did. The Bank of Madurai MD and the CEO says today in India. And also, by the way, if you're thinking to yourself, what relevance does this news may have to you if you live in a different jurisdiction? If you're somebody that lives in the EU or America or Canada or Australia, or no matter where you're watching this from around the world, if you're thinking to yourself, why does Indian crypto news have any sort of relevance to me, or CBDC news has any sort of relevance to you? It's because of the payment system they're going to be using, Ripple, XRP Ledger. That's the relevance. If you're somebody that's holding XRP, that's the relevance here. So here it is. The central bank digital currency, CBDC, this perspective from the CEO of the Bank of essentially India, is going to completely revolutionize the entire payment system. In terms of how one makes a payment, just like UPI did in India. Now, Chand, the MD and CEO of Bank of essentially Borders, said, banks, along with the regulator, are working on CBDCs to create the ease of doing transactions that can be far better as compared to any other mode of essentially transactions. While speaking at the International Trade Fair and Conference for essentially the BFSI and FinTech sector, India IBEX conference, he said, when the UPI came to India, when the UPI system came to India, many doubted if somebody is getting a credit, why will they essentially forge that or go for a digital debit into an account through UPI, and then very small ticket transactions moved to UPI. Why? Because of the ease of which people are able to do their transactions just by scanning a QR code and sending a payment at the groceries, for example. And when we talk about CBDCs as of today, possibly still are doubts in the minds, but we are confident that the concept of CBDCs is going to work successfully in India now. So India is pretty much signaling the entire world, they're ready to go CBDC. Now, India has released their CBDC up to a very small portion of CBDC they've released, very small portion of CBDCs they've released for test purposes, essentially. But they're essentially telling the whole world right now that they're pretty much ready to go into CBDCs. They're ready to launch the CBDCs. All their testing is done. They did UPI systems first to get people adapted to the idea of, scanning a code, a QR code, and paying for their items. And now people can shift over to CBDCs. Talking about the use of technology has brought about the ease of underwriting process of banks, whereby banks are going to end digital. He said the beautiful part, this is what he said, the beautiful part of what is happening is banking is many of the underwriting process we are getting completely end-to-end digital already, along with partners. You can guess who their partners are for their CBDC sector. We have made the RG credit essentially delivery digital. We are going to do it for essentially MSMEs and going to do more and more such products to have either end-to-end digital or associated digital essentially processes. I think as partners, both operating the system, you as a tech partner, we as a bank, we have to talk about personalized services, omni-channel integrations, hyper-personalization, data analytics, cybersecurity, integration, which is the next level of usage. And I think all of us need to work to improve that when it comes to CBDCs. I agree. I mean, securities must be essentially improved. But either way, if you want to benefit from a CBDC, going for the backbone of a CBDC is the best idea. Because as I said previously, you can't go against CBDCs. You can't go against this digital world. If you're somebody still out there that's saying cash only, you're going to get left behind naturally. And, it's better to always be in the front of the line than the back of the line. The reason why most people, stay where they are in life, because they choose the comfortable route, which is to stand at the back of the line. It's just let everybody else take everything they want. And when they get to the front of the line, there's nothing left. What you want to do is adopt to this, essentially, this new digital world we're going to be entering into, this CBDC world we're going to be entering into, and stop trying to resist it. The more you stop resisting it, the more you try to adopt yourself faster, the more you realize, hang on a minute, I can actually profit from going into a CBDC world rather than trying to debate CBDCs all the time. And lastly, he also said that banks need to work towards bringing down cost-income ratios using the development of technologies and new artificial intelligence models. He said, I think you need to slightly figure out how to reduce the cost to income to the banks, particularly the usage. Like essentially, suppose I have taken a technology and I'm handling a business volume X and the cost is something. Can I make it Y, essentially X plus Y, so that my cost goes down? Well, the good thing is if you use the XRP ledger, your cost automatically goes down. If anybody saw Ripple do a $700 million plus transaction, if you haven't, go and check it out. Ripple did a $700 million plus transaction, and the fees were for a $700 million transaction or transfer was 0.0004. If you try to do a $20 transaction on Ethereum when the network is congested, your fees will be $65, your transaction will be $20. And Ripple did on the XRP ledger, $700 million plus. Fees was 0.0004, which is ridiculous. Ridiculously cheap, that is. But again, if that transaction was on Ethereum, you know for a fact that transaction would have been redonkulous in terms of the fees. Because Ethereum is expensive to send $20, never mind $700 million. Now, US banks are eyeing crypto custody, aimed essentially the Trump pro-crypto shift. Now, why are US banks looking at crypto custodies? Well, because the SEC announced it. They're going into crypto custody rules and regulations. Everything the SEC keeps on announcing, Wall Street gets a little bit more hyped up. Banks get a little bit more hyped up. It's about to roll off, in other words. And, well, the US crypto scene is booming. And President Donald Trump's return as his pro-crypto stance and the push for clear regulations are sparking major excitement in Wall Street right now. Major establishments in Wall Street right now, major firms are right now trying to jump on the bandwagon of cryptocurrencies. There was actually, you could say sit down they had with a few firms in Wall Street, where they all said they're just waiting for the regulations to drop. They're waiting for blockchain IPOs. Some Wall Street firms even said they will help blockchain firms. They will help them out to go public no matter what. That's how much in favor of essentially they are for the blockchain space now. Wall Street is just waiting on the sidelines, waiting for the SEC to drop the rules, drop the regulations, and drop the cases. So here it is. In recent updates, insights on the growing involvements of US banks in the crypto service sectors. Notably, some large banks are leveraging regulatory changes under President Trump to enter the market with a focus on cryptocurrency custody services. Citigroup is considering adding crypto custody services, according to sources quoted by the information. This move essentially follows the bank's announcements essentially of successful proof of concept projects, which showed its ability to issue and store tokenized private equity funds on blockchain networks. Notably, Citigroup, with $2.4 trillion in assets, is joining other major financial institutions in the growing digital asset custody space. BNY Mellon is also expanding its custody services beyond Bitcoin and Ethereum ETFs, while Standard Chartered Bank has also rolled out its digital asset custody service in Dubai by name of Zodia. If you didn't know, now you know. A long while ago, they released essentially Zodia in Dubai, but they have been expanding on Zodia. It's a custody platform by essentially Standard Chartered Bank. Standard Chartered Bank and Zodia Custody are also part of Metico, which is owned by Ripple. You can see where this is going. Metico is part of IBM HSBC Bank to create what? Custody services. For what? Institutions. And then also on the topic of BNY Mellon, massive firm, they've also decided to shift away from Bitcoin and Ethereum, and they want to go for other crypto projects. You can also take a guess of which other crypto projects they want to mainly go towards. HSBC is also planning institutional grade custody offerings, who's also a partner, ironically, of Metico, where they created together a custody service, who was also owned by Ripple. HSBC Bank is also a partner of Ripple, also partner of SBI. HSBC is planning institutional grade custody offerings, and Credit Essential Agricole and Banco Santander, also partner of Ripple. Joint ventures secured crypto essentially custody approvals in France, which means they both have MiCA regulations to be inside the crypto space, which is very beneficial for their digital partner, which also being Ripple. Meanwhile, State Street managing $44.3 trillion. State Street managing $44.3 trillion. Partnered with Taurus to offer crypto custody and tokenization services for institutional investors. You can tell Wall Street is, really waiting for this whole blockchain space to thrive, for the regulations in the case to get dropped. While Coinbase is in talks with banks to offer custody and trading services. However, many banks are still waiting for approval from the Federal Reserve and the New York Department of Financial Services. Well, the good thing is, yesterday I announced that New York has decided to create its own crypto task force. The SEC has its own crypto task force. The CFTC also has its own crypto task force, which, by the way, the SEC and CFTC made announcements yesterday. They're going to come together after a decade just because of the crypto space to bring in regulations faster by combining two departments. And being that and moving so fast, At the same time, New York essentially yesterday announced they're going to be creating their own crypto essentially task force, because New York wants to move faster when it comes to the crypto space, and the best way to do it is by creating a crypto task force. Instead of waiting for the SEC and CFTC to move faster, why not just get involved? The old saying is, instead of getting somebody else to do, you can do it yourself, because you always do a better job. However, many in the industry are concerned about debanking tied to new tech. Recently, Jerome Powell has also promised to work with Congress to end this issue. Jerome Powell, also being another member who was completely against the cryptocurrency sector, for many years bashed the cryptocurrency sector because Biden's administration or circus freaks was standing behind them. When I say, Biden's administration or circus freaks, I mean the administration behind essentially Biden, not the people that support essentially Biden, just the politicians. And the only reason Jerome Powell was also, standing strong on his high horse was because of Biden's administration and politics of circus freaks. And now Jerome Powell has realized that he doesn't really have the power he claims to have, because Trump could potentially kick him off his high horse whenever he wants. So obviously you're seeing Jerome Powell get a bit more friendly towards the crypto space as well, by talking very positively for the past few days about the crypto sector. Banks should not be going against crypto and so on, and if anybody's doing that, that's completely wrong, and I will look into it and I'll stop it. That wasn't his previous speeches, but it is his newest speeches. Now, also, at the same time, more banks are eyeing crypto services. For example, Morgan Stanley-backed E-Trade hinted at offering essentially crypto services, while Goldman Sachs said it essentially will be considering digital asset operations if regulations allowed. So Goldman Sachs going from "we hate cryptocurrencies" to now their recent 13F filings. They hold essentially have exposure to Bitcoin ETF, to Bitcoin and Ethereum ETFs. They have exposure to that due to the 13F filings that was released today, Goldman Sachs. Also, Goldman Sachs was against cryptocurrencies. Now, however, not just having exposure to the ETF section due to the 13F filings with the SEC, that's revealed that they also want to go more beyond Bitcoin and Ethereum ETFs. They want to go more inside the digital sector. In their own words, they were wrong. This digital world is definitely here to stay, and it's going to get much more bigger as we progress forward, especially with Trump presidency, an executive order that states America is about to become the capital of cryptocurrencies. It's no joke. Don't take that, executive order, essentially as something that, he signed it, whatever, things still haven't moved. That executive order that Donald Trump signed, the president of the United States, for America to become the capital of cryptocurrencies a few days ago, essentially a week ago, so on, is the biggest green light essentially any government department needed, any essentially SEC, CFTC, FDIC, CFPB, OCC, all these what they needed was that green light. That was the biggest green light to all these departments, hence why they became friendly altogether. All the departments, CFTC, SEC, CFPB, OCC, FDIC, they all became friendly together. Once that executive order was signed, they created the crypto task force. They started bringing the foundation for cryptocurrencies and so on. So that executive order Trump signed was no joke. And yes, he did sign it a while ago, and things haven't moved incredibly quick, but a lot of things have moved. A lot of things have changed for the better. That was the biggest green light any bank needed, or any institution needed, for example, to get more involved inside the crypto space. And it shows by the buying purchase as well, because once Trump became president, essentially what Trump became president is the exact same time many institutions started buying and going more towards digital assets. That was right before the executive order. Now, Cardano's founder, moving on essentially from Goldman Sachs and BNY Mellon and all these major establishments and so on that have cryptocurrencies are going more towards cryptocurrencies and going beyond Bitcoin and Ethereum, to Cardano's founder. Cardano's founder has a new perspective on the market space. And his newest perspective on the market space is 3 crypto projects are the clear winners for this year. Clear winners. Here is his prediction. Cardano's founder predicts that ADA, his own token, Ethereum, and XRP are the market cycle winners going forward this year. Now, this is his perspective. Cardano's founder, Charles Hoskin, is confident that ADA, Ethereum, and XRP will be the best performers in the current crypto space. In an episode of Essential Media Podcast, Cardano's founder said he provided his view on the market strengths and the roles of institutions and the factors driving its growth. Cardano's founder noted that the crypto markets had its first initial essentially institution-based cycle, which tends to reduce essentially volatility and bring more stability. He cited the market's ability to quickly recover from a slump, and essentially that occurred on February 3rd when former President US Donald Trump announced tariffs, which only lasted about 36 hours on the market space and the volatility, and went back to normal. As I said previously, tariffs on any country in terms of volatility in the market space, the max it will last is 48 hours on impact. After 48 hours, the market restores itself. When it comes to tariffs, always remember that. No financial advice in a certain way, but you can tell from the charts. Now, while $3.2 billion in liquidation essentially impacted 700,000 leverage traders on the 3rd of February, the market bounced back in 2 days, which it did not happen during the FTX situation, which is facts. The crypto market, did not bounce back the way it did during the tariff situation. Because when FTX went down, the market didn't bounce back within 48 hours. It took a while for the market to bounce back. When Lunacy situation happened, it took a while for the market to bounce back. Now, why is he saying essentially Ethereum, XRP, and Cardano are, the chosen ones moving forward for this year? Now, it is his perspective, and it could be biased because he's saying Cardano and it's his own project. But his perspective is because these three crypto projects bounce back the fastest. These assets have already shown good improvements, especially in the fourth quarter of 2024, and attracted the attention of ETF issuers. It's true. We have Ethereum ETFs and more Ethereum ETFs happening. Also, refilings of Ethereum ETFs happening, essentially for staking capabilities. We also have a lot of XRP ETF filings and a lot of Cardano ETF filings. And when you have filings like that, it shows that institutions are interested to buy it. Clients are interested to buy it. Otherwise, there'll be no ETF if they weren't. So according to Cardano's founder, new rules and regulations, particularly in stablecoin policies, may be the trigger behind the next bull run. He's basically saying, Cardano's founder is basically saying that regulations and regulations in general are going to be the next stepping stone for a bull run, which is facts. As I've been saying for the longest time, the cases need to go away. Green one, 3 green lights. Cases need to go away. That's the first green light. The SEC, dismiss all settlements. And I said this for XRP as well, but I also said it for the rest. But look, in general, cases need to go away. I said this earlier on the live as well. Second green light essentially being that regulations, and third is adoption. After that, it's pretty much the sky's the limit. So he is perfectly right. Regulations is going to be the next stepping stone for a parabolic run. And what regulations will bring is that crypto projects that are legitimate will do the best on the regulations by a mile. Crypto projects that are legitimate will do the best on the regulations by a mile because they have the licensings to go for it. They have the licensings already. They have the contracts in place, and developments have been going on for years in the background. So once the regulations drop, they can pretty much go. So he is perfectly correct on that. Regulations are going to be the next one because the main point of cryptocurrencies was not buy, sell, quick profits or funny looking tokens. That was never the main point of cryptocurrencies. The main point of cryptocurrencies was utility, which is what will happen when regulations drop. Utility will happen, which means crypto projects that have contracts and licensings will do incredibly well with their utility on the regulations, which means a lot of capital will be flowing into them from banks and institutions on a worldwide basis, depending on different jurisdictions, on how fast they move on regulations as well, following the United States footsteps. So he believes that it will continue to rally in the next 6 to 12 months. The moment the regulations drop, Cardano's founder is saying that the market will continue just to go up, up, and up, and up. 6 to 12 months, it will continue going up. Now, I said this in 2024. I said once the regulations drop, once we go into utility, I said the more we go into utility, the more the market is just going to continue going up for certain crypto projects. And it's going to reach a certain stage where obviously the decoupling is going to be happening. The regulations drop, we go into utility, decoupling starts to happen. No more crypto projects following Bitcoin's footsteps, essentially. I said this a long time ago. Two years ago, I said this as well. I said the moment regulations drop, decoupling will be happening. And the more crypto projects go into utility, the more XRP, XLM, XDC, HBAR, Cardano, essentially AVAX, TON, Near Protocol, and the list just goes on of tremendous, essentially legitimate crypto projects. the more we go into regulations, the more we go into utility, the more essentially decoupling there will be, which means certain crypto projects won't get affected by bear markets anymore, or volatility in that sense. For example, if XRP is adopted worldwide basis in terms of domestic or international payments being used as a medium of payments around the world, a bear market is not going to affect it because XRP is being used 24/7 as a payment system, pretty much. So a bear market wouldn't have any sort of implication on XRP because payments are still being transferred around the world using XRP, which means no more bear markets because now it has utility. Bear markets affect the crypto space because we have zero utility. Now, bear markets will affect crypto projects that have no utility. Bear markets will still affect meme coins because they have zero utility. Bear markets will still essentially affect useless crypto projects that have no utility or licensings or anywhere around the world. They will still affect those types of crypto projects. But bear markets won't have the same essentially effects they have now on crypto projects once utility is in place, because how can it have effect when if XRP is going to be used as a medium of payments back and forward around the world, people are sending hundreds of millions of dollars or $1 billion transaction on XRP, 24/7 transactions happening. A bear market wouldn't affect XRP in any sort of a way, just wouldn't exist for XRP then, because it's being used 24/7. So once utility kicks in, this whole cycle of bear markets or following Bitcoin's footsteps is pretty much going to end for certain crypto projects. Not for all crypto projects, but for certain crypto projects. It's just going to come to an end because now they're on their own separate path. They're on the path of utility, which was the main purpose of cryptocurrencies since day one. Now, so what he's saying right now here is facts. Regulations will be the stepping stone for the next run, a parabolic run. Then after that, we're going to have 6 to 12 months of just climbing, going higher and higher. In my point of view, the more we go into regulation, the more we go utility. Every year, we're going to go higher and higher on certain crypto projects. But he's saying 12 months of just parabolic runs on the utility, essentially. This is Cardano's founder. And he talks about the regulatory framework shifts to focus on token classifications and other issues of custody, which are main factors when it comes to cryptocurrencies. However, he also pointed out that there will be quick variations due to new developments inside the market space as well. The general absence of a wider altcoin season continues to be an area for investors. While Bitcoin has repeatedly reached new all-time highs, most altcoins have not been able to attain similar essentially feats. And previous highs have been essentially exceeded only by a handful, like Solana, for example, did very well for itself. And previously, the total cryptocurrency market capitalization reached an average growth of 98.41% in 2024. But if we exclude Bitcoin, it was only 71%, showing a disparity. Meme coins continue to dominate short-term trading and managing to attract liquidity. According to other essentially sources, there is no need for fundamental-based investments or investing in profitable essentially projects and so on for meme coins. But in general, the only reason the market is the way it is, the only reason the market gets volatile, the only reason we follow Bitcoin's footsteps is because we don't have utility. Once utility kicks in, who's Bitcoin going to affect then? Meme coins and useless projects. Bitcoin's footsteps will never affect XRP, XLM, XDC, HBOR, any crypto project that has legitimate use case purposes, contracts in place, and licensings on the regulations having utility. Bitcoin's footsteps won't essentially have any sort of effects on it anymore. And neither will bear markets, because it can't. It just physically can't, because it's being used 24/7. The only reason the market gets affected now is because crypto assets aren't being used for their purposes. They're being used for buy, sell, quick profits for the retail section. Some retail section hold it, and the institutions are still testing. Now, obviously, they got to a stage where they're ready to essentially get involved more now. But anyways, these developments suggest a potential shift, essentially, in the regulatory landscapes for cryptocurrencies, and that the ETF space, market space as well, and also and other aspects inside the market space in general. Now, putting that to one side regarding what Cardano's founder said, his chosen picks for this year and pretty much beyond. Talking on the subject of XRP, SEC acknowledges another spot XRP ETF filing. So we have another XRP ETF filing. According to Cointelegraph, the US Securities Exchange Commission, SEC, has formally acknowledged the filings of 21 shares for XRP as well, in terms of an ETF. Now, the SEC acknowledged the Grayscale XRP, essentially ETF, yesterday, Now they've also acknowledged the XRP ETF for 21 shares today. This acknowledgement follows closely on the heels of SEC's recognition of Grayscale Investments' proposal to list trade shares of its Grayscale XRP Trust as an ETF. I also said that Grayscale is a type of, essentially type of institution that pushes their way in. So when Grayscale applies for any sort of ETFs, that means chop chop for the SEC. That means hurry up and approve us, because Grayscale sues. We know Grayscale sues because they sued for a Bitcoin essentially ETF and they got it. And they were the ones that kickstarted the Bitcoin ETFs because they sued the SEC. And the judge said, well, if you can't come up with a genuine reason they reject it, you have to approve it. Which is why we had Bitcoin ETFs happening in January. So we know for a fact Grayscale sues. And it basically means chop chop for the SEC. Move faster for the XRP ETFs. Now, the faster the SEC moves for XRP ETFs, the faster they're going to move for the case to dismiss it and settle it, because they can't release an XRP ETF and have the case still ongoing, because that's a major confusion for the Second Circuit. Because how can you accept this asset when you're trying to sue this asset or sue the platform that creates the asset? Also, if they do release the ETFs first and the case is in drop, but that's the only, what's going to happen instead is the case will be dropped very quickly straight after the ETFs are released. So, but in general, Grayscale applying essentially for an XRP ETF means chop chop to the SEC, otherwise we're suing. And why is that bad? Well, because the SEC now is pro-crypto. And it is. The SEC is pro-crypto. Hester Peirce is pro-crypto. She's in charge of Crypto Task Force. And essentially Mark is pro-crypto as the acting chairman of the SEC. So the last thing they want is being sued by Grayscale for an XRP ETF. Which means they have to move extremely fast now. Faster than ever before. Because they can't look bad. Because they're supposed to be the pro SEC for crypto. Now, 21 filings also got acknowledged straight after Grayscale's XRP ETF got acknowledged by the SEC. Straight after the next day today, essentially 21 essentially shares XRP ETF also get acknowledged. So in other words, the SEC goes, okay, we know these filings exist now. And these developments suggest essentially a potential shift in regulatory landscapes for cryptocurrencies-based financial products. And many essentially in communities are excited for an XRP ETF approval anytime soon. 21 shares submitted their Form S1 to the SEC seeking approval to list its core XRP Trust shares on the CBO BZ exchange. And they did this back on November 1st, obviously when essentially we still had Gary Gensler in charge. And now fast forward today with a pro SEC for cryptocurrencies, they acknowledged it. 21 shares was the third firm to apply, the third one, to apply for an XRP ETF following early applications by Carney Capital and Bitwise XRP essentially ETF filings as well. As mentioned earlier, the SEC has acknowledged the Grayscale investment proposal for an ETF. The SEC acknowledged and initiated a process to solicit public comments for the application. In late 2024, the SEC under former chairman Gary Gensler refused to consider any ETF applications from altcoins, stating that it would not approve any under the outgoing essential administration. And Gensler is notorious for his war on crypto for a multi-year against cryptocurrencies in companies like Ripple and Coinbase. However, with Gary Gensler now gone, the regulator seems to be headed in a more essentially pro-crypto direction, and some have speculated that many essentially may dismiss the Ripple law, and that the SEC may be dismissing the Ripple rules lawsuit and other non-fraud cryptocurrency lawsuits very soon, which they have to, because now they're acknowledging the ETFs, which means the SEC cannot come back and say we reject the ETF. That would cause, well, let's just put it this way. If the SEC comes back and rejects any essentially XRP ETFs or any Solana ETFs or any Cardano ETFs or any HBAR ETFs, it has to be for a slim chance if it gets rejected, but it has to be for some sort of filing corrections. But if they're rejected on the basis of, we don't want to do this, they're getting sued. And again, that can't happen for the pro-crypto SEC, which they are. So it is really chop now that they've acknowledged the XRP ETFs. They have to approve them. Extending them also makes the SEC look bad, because that's what Gary Gensler used to do. So the acting chairman of the SEC and Hester Peirce, who's in charge of the Crypto Task Force, are on a lot of pressure now. A lot of pressure, because they can't look bad, especially in front of a pro-crypto administration, which is the president in this case. So these two people, Hester Peirce and Mark, acting chairman of the SEC, Mark, Hester Peirce Crypto Task Force, they can't look bad. So since now they've acknowledged the essential XRP ETFs, we can have a better timeline on the XRP lawsuit getting dropped, which could be very soon by the looks of it. Because they've acknowledged 2 XRP ETFs, essentially, which means they're going to move now faster. They have to. They have no choice. Now, the regulator has acknowledged another ETF. Other major developments like potential dismissals of the Ripple lawsuit may come sooner than expected because now they have no choice. By acknowledging an XRP ETF, it means they have to dismiss the Ripple case or settle the Ripple case ASAP now, pretty much. Very fast, they have to do it. Now, I've given a timeline of Q1 and Q2 previously. I'll stand by it. But they have to do it fast. They could do faster than that as well. Because by acknowledging the XRP ETFs, they have no choice but to move incredibly fast now. Because if they don't, XRP ETF gets extended in any sort of a way, lawsuits will be flying out the window. And that's the last thing the new pro-crypto SEC wants. So they acknowledge the XRP ETFs, 2 of them, which means now they have no choice but to move incredibly fast. And the positive news, essentially, over the past 48 hours has been on the price of XRP significantly, because now everybody's waiting for the dismissals and settlements and XRP ETFs. They have no choice. By acknowledging the XRP ETFs, they need to move incredibly fast. If they don't, gets extended for some oddly reason, lawsuits will be flying. And that's the last thing Mark and Hester Pierce want. And that's the last thing the Biden administration wants, because they're all pro-crypto. So Mark and Hester Pierce are an incredible amount of pressure right now to move things incredibly fast, which would explain why after a decade, after 1 decade, why the SEC and the CFTC announced coming together after a decade just to make the crypto space move faster. Because there's a lot of pressure on them right now. Too much. And they can't even have 1 lawsuit against them. From any crypto, from any major crypto firm, they can't have 1 lawsuit against them. New lawsuit. So that will explain why they come together. CFTC and SEC announced 2 days ago they're coming together after a decade just for the crypto space to work together and establish regulations and guidelines ASAP. Because that's the pressure that's on them right now. They can't get sued. No new lawsuits could be against the SEC or the CFTC. Otherwise, they look bad in the eyes of Biden's administration. Now, on that topic, Ripple's CEO expresses optimism about US crypto regulations after DC meeting. Essentially, Ripple's CEO is having multiple sit-downs with Trump or Trump's team, DC members or senators or governors. Ripple's CEO is going everywhere, making essentially, him being heard in that essentially political space. And it should be. Bitcoin maxis are angry about Ripple's CEO, going around essentially and lobbying is what they're calling it. Bitcoin maxis are saying Ripple's CEO is going around and trying to stifle Bitcoin's growth. Why is Ripple's CEO having sit-downs with Trump? Why is Ripple's CEO having sit-downs with politicians, with governors, with senators, with DC members? Why is Ripple's CEO doing? And Bitcoin maxis are really angry. Well, what the Bitcoin maxis don't know, or they seem to, don't want to accept, is that the reason why we had a pure Republican, essentially clean sweep in terms of what's happened with Trump, essentially, and everyone else, which, again, I suppose, thank God Trump won. The reason why we had a Republican clean sweep is because companies like Ripple, well, also Coinbase, came together, created a crypto wallet, you could say, essentially, a crypto share pack or fair pack, and they invested millions upon millions upon millions of dollars. We're talking $20 million, $50 million, $100 million. Ripple and Coinbase invested into politicians. Hence why we had a very clean sweep of Republican sectors. So, if Ripple essentially invested all of that money to get all of those people, to get all the Republicans, the senators, the governors, all these Republicans, to get them to where they need to be sitting in that seat, if Ripple made that happen alongside Coinbase, then Ripple CEO has every right to be in that room to talk to those politicians, because that man, with his company and Coinbase, Brian Armstrong, CEO of Coinbase, got them there. The majority of them. If you go back to the donations that Ripple made, it's ridiculous. And taking a step further, Ripple has made donations for the 2026, essentially, political, appointees for the United States government. Ripple has already invested another $25 to $50 million for another group of politicians that are going to get elected, essentially, in the United States for 2026. Ripple is planning ahead when it comes to politics. So to all the Bitcoin maxis out there that's saying Ripple is trying to stifle, the CEO of Ripple is trying to stifle, essentially is, he's stifling Bitcoin's and growth. Ripple CEO Brad is stifling Bitcoin's growth. Why is he talking to senators? Why is he talking to governors? Why is he talking to this and that and that and this? It's because the man paid for those people to get to those seats. So how about you be grateful for what Ripple's CEO did? Because if Ripple's CEO and Brian Armstrong didn't come together and invest hundreds of millions of dollars to get all those politicians to those seats, the Bitcoin people wouldn't be standing so highly strong now, would they? Because it was because of Brad and Brian Armstrong, the CEO of Coinbase, that all this happened, where the clean sweep of politicians, Republican politicians, because these two men made it happen. These two people made it happen. So honestly, to all the Bitcoin maxis out there, and Brad should not be in the room of those people, Brad should not be sitting with politicians. He got those politicians to those seats. He spent hundreds of millions of dollars to get those politicians to those seats. And he spent more money now for 2026 for more politicians to get to those seats. So he has every single right to be in that room next to the senators and next to the governors and next to any other politician they got to their seats. And on Brad, more on Brad, Ripple CEO Brad attended meetings with several lawmakers, essentially discuss crypto regulations. Judging from his comments after the meeting, Brad seems hopeful about crypto's future policies. He should be, because he got a lot of them to those seats. He met essentially with Rep. Richie Torres and Senator Tim Scott and the U.S. Senate Banking Committee's chairman, Representatives French Hill, Bill, Brian Steele, Zach Nunn, William Thomas, and essentially a lot more politicians were essentially present, all Republican politicians, all the people that they invested into. Brad shared pictures of him and other policymakers inside the crypto space for the United States after the meeting, and judging from his ex-post, essentially, he seems hopeful about the upcoming clearer crypto regulations. The firm's CLO, Stewart, also joined the CEO, Brad, in the meetings. However, it's unclear whether other Ripple executives were also present, because they weren't in the pictures, but they could be still there. Other Ripple executives, doesn't matter. Brad was there, the main key player, and CLO, essentially, Ripple was there. Also Stewart, main key player. And also David Schwartz could have been there as well, CTO. Aside from essentially CLO and Brad, Stewart and Brad, Bo Hins, the executive director of the President Council of Advisors on Digital Assets, New York Senator Chuck Schumer, a Democratic whip of the U.S. House of Representatives Catherine Clark, were also present in the meeting. Brad believes lawmakers could establish proper regulations. He said, walked away from an action-packed day in D.C. yesterday with the feeling essentially that there is finally, in brackets, an incredible opportunity to advance a meaningful legislation that establishes clear, constructive, and pro-innovation regulatory frameworks for crypto. In January, essentially, Brad also discussed including XRP in the National Digital Asset Reserve with President Trump, and he should have every right. Every right. Brad should have every right. Bitcoin maxis are like, why is Brad trying to push XRP into President Trump's crypto stockpile? Why is he trying to do that? Because he has every right to do that. He invested for all these things to happen. He invested for Trump to happen. He invested for Republican politicians to have a clean sweep to happen. Everything you're seeing was Brad and Brian Armstrong, Coinbase's CEO, that made it happen. These two big players made the Republicans have a clean sweep, pretty much. They invested a ridiculous amount of money into all the Republican politicians. Ripple and Brian, essentially Coinbase. And so to all the Bitcoin maxis also out there saying, why is Brad trying to push his XRP into a stockpile? He has every right to do that. Every right. If I spent $100 million on a political campaign, if my company spent, and if the same question you could ask yourselves as well, if my company or your company spent $100 million for a presidency, you have every right to be in every room to get where you want to essentially get for your company, to bring that innovation in. If you're a blockchain company, for example, and you spend $100 million to get a president or essentially to get Republicans to have a clean sweep, then you have every room. You have every right to be in any room to have a discussion with these people, because it's your money that got the majority of them to those seats. So you have every right to be in that room. And you have every right to give it a shot, to say, you know what, why not involve this also in your crypto stockpile? Why? Because it's an American company. Why? Because we give you a clean sweep. At the time, Brad also expressed his confidence in Trump's leadership saying the president essentially understands blockchain technology and is committed to being the crypto president of the United States. Before Ripple had essentially even donated $5 million to support, essentially, further highlighting Brad's confidence in Trump's leadership. Brad and Trump are having very good sit-downs with together. Honestly, Trump's administration and Trump himself with Brad and Ripple's CLO Stewart are having a lot of sit-downs together, which is great to see. Has a lot of sit-downs with, and all the people that I named that Brad had a sit-down with, you know, regarding Tim and essentially Chairman French Hill. These are the people that are creating the bills, the stablecoin registration bill, you know, the act, the Genius Act, and so on and so on. These are the people that are creating the bills, and Brad's having sit-downs with them. So a lot of things are happening behind the scenes. Too many things are happening behind the scenes. With the SEC now feeling the pressure from acknowledging the XRP ETFs, which means they have to approve the XRP ETFs ASAP, and essentially they can't reject the XRP ETFs because that would look bad for the SEC. So with the pressure that's going on essentially on Mark and Hester Pierce from the SEC to approve XRP ETFs, which means more pressure is on them to dismiss the Ripple case and settle it. And essentially with all the pro-crypto activity that's going on, and with Brad being in every room possible in Congress, with senators, with presidents, with Trump's administration, quarter one, quarter two, we're going to see something drastic happen. Quarter one and quarter two, we're going to see something drastic happen. It has to. It just has to. Unless a war happens out of nowhere. But other than that, it just has to. And on that note of XRP's, once again, as always, the chosen project since day one. This was the CMF Live. So all good things must come to an end, which they have now. If you're watching this for the first time ever, this is the CMF Live. It stands for Crypto Miles Family, which my name being Miles, I go by the persona of Crypto Miles. And I, host this live show you're watching right now on X and on YouTube. We're airing right now. Monday to Friday, you can tune into this live show, 11:25 p.m. UK time. Essentially Monday to Friday, 11:25 p.m. UK time, United Kingdom time. You can tune into this live. If you're not following me already, you should be, to be fairly honest, because I will update you along the way, Monday to Friday, as much as I can of what's really happening around the world in terms of essentially politics, in terms of regulations, in terms of cryptocurrencies, in terms of CBDCs, in terms of AI. If you want to be updated about these vital things that's happening around you, then you need to be following me. You need to be watching this live Monday to Friday, 11:25 p.m. UK time. If you can't catch the live, watch the replay because it's still beneficial for you. Especially if you're new inside the crypto space, you should definitely be following me because I'm giving you what you need to hear. And I'm giving it to you straight. And I just read Scott's comment. Please, Miles, don't end it yet. It's too fun and entertaining. Let's go, Scott. But if you're not following me already, follow me, subscribe, and tune into these lives. Monday to Friday, 11:25 p.m. UK time. Join the CMF Telegram page as well if you already haven't. Also free. Join the X communities page for the CMF on X, Crypto Miles Family Lounge. It's on my profile on X, specific Twitter in other words. And tune into these lives Monday to Friday, 11:25 p.m. UK time. Which is actually today being Friday, which means the next episode of this live will be essentially airing Monday. And this is episode 263 of the CMF Live. So for episode 264, tune in Monday, 11:25 p.m. UK time onwards. Follow me if you're not. Like, comment, share, retweet, and subscribe if you watch us on YouTube. Now, before we do go, let's go inside the comment section first. Obviously, I don't want to miss out on anyone's comments, just in case. Is there 13F filings just for ETH and BTC? Yes, for ETPs and ETFs, and only for American companies for the 13 filings. For the Bitcoin, Ethereum, ETPs and ETFs based inside the United States, but it could also be international companies that also have to file 13F filings with the SEC on that case. Hello, Miles. Johnny Bravo, good to see you. How you doing? How you been? Miles is free. He's always been free. He's never sold me anything. Checked on me while I was in hospital. That's true. I did call Scott when he was in hospital. This guy is legit. Let's support him. Share the live. Post the response. Let's go, Scott. Thank you, brother, for the kind words. Miles is free. Has always been free. Has never sold me anything. Checked on when I was in hospital. This guy is legit. Let's support him. Share the live. Post the response. Let's go, Scott. Thanks so much for that, brother. Did you see how Brad lent MoonPay $60 million to help with Trump's coin? Yes, I heard something about that. I did hear something about that, Mickey. Thank you for the update, though. Hello, Miles and CMF. Glenda, good to see you. Trump is going to get the world back on their feet, and he's going to make the crypto space the best space to be in facts. Elizabeth Warren is in trouble. Elon's Dodge is looking into her and other politicians and assets and asking how they have so much money on their annual wages. She has her cameras running. Elizabeth Warren should be arrested a long time ago. To be fairly honest, she should have been arrested a long time ago regarding Elizabeth Warren. A lot of politicians, to be fairly honest. Well, he's got 2 out of 3. It's all about timing, facts. The next time it will be over. Let's go. What are the maxis? Bitcoin believers? Pretty much, yeah. Invest in odd. Invest in odd. Love that's lives. Love these lives, I'm guessing you're trying to say. Let's go with XRP. CMF, our family and leader will be walking into the bank soon. Why? We'll be essentially counting our dollars and planning to meet and to buy CMF. Let's go. Share the live, post the response, support our family. Let's go, Scott. Please, Miles. Scott, let's go. Have a great weekend, Miles and family. Comatose, let's go. Have a great weekend as well. Good night, Miles and family. Great live. Many thanks. See you on Monday. Ian, see you on Monday. Same time as usual as well. Good night, Miles, and all the CMF. Thank you for all the news and great live. Let's go, JP. See you tomorrow, brother. Same time as usual. Thanks for your daily preparations for our family programs. Let's go, Scott. See you tomorrow, brother. Same time as usual. Let's go. Let's go, XRP. I love and respect my CMF, and Miles says, let's go. Have a good weekend, CMF. Thanks, Miles. See you on Monday. See you on Monday, Orphan. Same time as usual. Night, Miles. Pablo, see you on Monday. Same time as usual. Thank you, parents, Miles, for producing such a great friend and a man. My mentor. Let's go, Scott. Brother, thanks so much for the kind words. Miles, you never cease to amaze me. Every night, you're just so good. Adi, thank you so much for the kind words. I'll see you on Monday, same time as usual. Best way to spend Valentine's Day, learning from your wisdom. Way better for you than chocolates, lol. Thanks, Miles. Have a great weekend and see you Monday, same time, same place. Let's go, Autistic, and happy Valentine's Day as well. I agree wholeheartedly, Adi. Let's go. Have a great weekend, Miles. Let's go, JP. See you by the same time as usual. Monday. You two have a great weekend as well. Happy love day all. Let's go, Susie. Thank you, Miles, as always. Let's go, Pius. But I'll see you on Monday, same time as usual. Thanks, Miles. Happy Valentine's Day. Let's go, Peg. Happy Valentine's Day as well. I will see everybody on Monday, same time as usual. By the way, if anybody is even new to the crypto space, everything I provide is completely free of source. I don't provide any paid services. So you can message me, you can call me. Obviously, let me know 30 minutes beforehand. But you can message me, you can call me, you can join the Telegram group, you can join the X Communities page, and you can tune into this live, and it's all free. It's always been free for 2.5 years. It's going to stay free forever. So if you watch the first time ever, follow, subscribe, retweet, share, comment, like, and tune in Monday to Friday, 11:25 p.m. UK time. Will the 13F filings reveal how much XRP institutions have only on their ETFs or ETPs for the time being? I will see everybody tomorrow. I will see everybody on Monday. Sorry. I will see everybody on Monday, not tomorrow. I will see everybody on Monday, same timing as usual, 11:25 p.m. United Kingdom time or GMT time. No, it's not GMT time or British Summer Time. See everybody on Monday, same time as usual, 11:25 p.m. United Kingdom time. Just subscribe, follow, turn on the bell icon, or join the Telegram. You will know when I go live. Exactly same time, Monday, Friday. See everybody on Monday, same timing as usual. Everybody have a great day or a good night, depending on where you're around, and have a great weekend. See everybody Monday, same time as usual, for episode 264 of the CMF Live. See you. Thank you, Miles. You're the best. Let's go, Joe. Let's go, be Pisces. Miles is and has always been free, the best online. Let's go. Miles is free and has always been free, best person online, and is honest and has integrity. Let's go, Scott. Thank you so much for the kind words. Miles, where is the best place to message you? Probably not tonight. I'm going to bed soon. I'm exhausted, and so are you, I'm sure. Yeah. Message me on Telegram. Best place. Message me on Telegram. Or message me on X. Which one you feel comfortable with. See you every Monday, same time as usual, for episode 264 of the CMF Live on Monday. Everybody have a great weekend and happy Valentine's Day to everyone. See everyone.